Good morning, guys. Welcome to this Tuesday, May 20th. And so far, markets are holding on pretty darn good. A little bit of weakness after the pretty strong close yesterday, but so far, it's kind of holding in that upper range. This I just checked the Memorial Day schedule, and Monday, upcoming Monday is Memorial Day. That's a half trading day that day. So it's an early close. But that's kind of what we got to look for. But this whole week is a full week, the regular close on Friday, all right? Now, news this morning. Let's see, get this guy sorted like so. News this morning, we're looking at a pretty anemic news day. Not much going on at all. A couple of Fed speakers at 9. A Treasury announcement, buyback announcement at 11, but nothing really it's going to drive the market, I think. Tomorrow we got also pretty anemic news. It's just been whole week. A little bit more on Thursday and probably a little bit on Friday. But it's a pretty light news week, I have to say. So we'll see how the market feels about the whole thing. Yesterday was one of those days, based on that moody downgrade, that where they started off pretty weak and then ended up with a spectacular recovery and then some, and then we were bouncing up, extending to the upside again, and we're back at it. So we are here in the overnight, almost extended a little bit and backed off. So we'll see where they end up here, going here as the day starts. We are at getting up to this resistance area around about the 6,020s. We have taken out the 59.65, so we are trading there right now. I would say we're taking it out because yesterday's trading we extended pretty good above it. But if you can also make a case that we're trading just around it at this point. So we'll see. If they can't extend today, we may end up actually getting stuck here for a bit around that 59.65 attractor area. Not a big one, but they could certainly be holding on to the market for a bit. And as the market keeps trading higher up here against that 6,000, 6,020, we're going to find pretty good resistance again. And if they can clear that, I mean, we're going to be right back up here at the all-time highs, right? It's not that far away. Getting past that three-letter edge, we're going to be right up here in this area where they were working it pretty hard until we started getting that after, like, what is that? Back in my early March sell-off. So we're right back up again. 2 months, way down, way back up again. And it feels pretty darn good. So I think we have a good shot at heading right back up to the highs and then maybe even extending from there. So the big unknown is going to be a tariff surprise coming out or some other curveball, which we can't foresee. But if things keeps developing on this trajectory, I think we are going to be in pretty good shape. So I'm going to start off range bound with a bias to the upside, looking to buy weakness, 59, 55s, 45s down to the 35s, so rotations back up to these three support areas. They take out the 35s, I'm going to be back range bound at that point. At that point, I think we are, well, probably, no, I'm going to be looking to buy against those three supporters, at least in the morning. Then below 35, taking off that long bias, and we are back in this lower range again. So we'll see if they can hold on to that 59.65 area. But they're back below that 35, so you're back below this lower edge, and we're pretty much back in this lower range again, around the 5900s. So, but initially, you can certainly see them back it off that far, maybe even farther. Sometimes they always do back it off more than you expect, but these are the first three levels I'm going to be paying attention to. And then on the way up, and that's going to be very aggressive with short setups against the 75s and the 90s here for rotations back down. Either of them could hold if you're going to stick around the 65s, these two resistance areas could certainly hold, and then just we end up in a range bound market. If they take out that 59.90, look for right up here to the 6,020s. That's going to be your next resistance area to pay attention to. So that's how we get started. But we have retraced quite a bit of range, and we are right back up here, pretty darn close to the highs again. So starting off range bound with a bias to the upside, looking to buy weakness, 55s, 45s, 35s, so rotations back up. Not going to be super aggressive, but definitely looking to sell against 75s and 90s for rotations back down. And that would imply that we end up stuck around 65 in that attractor area. Below 35s, we are back in this lower range again. There could be a buying opportunity against this lower range. That would be one level outside the obvious, the 25s. But I'm going to take off the long bias already at the 35s if we start trading below that. So that's how we get started on the ES. Pretty straightforward. Let's see if they can keep this going or when they're going to run out of gas. I'm starting to feel very much like there's going to be a pile-on effect because at this point, a lot of companies have missed the whole rally. They've been waiting for, they've been shorting it on the way up, failed to cover, or some of them have covered and having to be buying and driving the market higher. And now we probably have money on the sidelines, starting to wonder if they're going to miss the whole thing and may start piling on the the bull market there, bull run. Anyway, so I'm thinking that we have a few different forces going to start to driving this higher at a pretty good clip because we've been climbing that wall of worries. And as people have been selling into it and taking short position, have been proving wrong, they've been run over, they've been having to cover. And every time they cover, they had to buy the highs. And then that means that they're driving the market higher. And then, of course, at one point, you start getting some momentum out of that. Anyway, on the bond market, we are back up here to the 113s. So pretty good retracement from that little sell-off we had based on that Moody downgrade. So that was completely reversed. Back up to the 113s, and we are right kind of we are back up in the range again. So we are back up in this upper range or in this distribution we were trading in. After I folded that stuff together, you can see this coming together to become a pretty decent distribution. The value area is the one to pay attention to here at the 1216. So 112.16 comes out, start thinking short side of the market. If they hold above it, I would say range bound trading. So I would be looking to buy against at this point against the 28, 29s, 22s, 16, 17s, rotation. Yeah, this is 17, 18s, and then 12 to 13s. So, but these two support areas would be the last two support areas to buy against. So I would say if you give it a little bit more room, you do wait until they take out this area, the 12 to 14 support area. And if you want to be more aggressive, you shift your bias already at 17, 18 here. So, but looking to buy weakness, let's see how far they can take it on the upside, or if this downgrade is actually, if this little retracement we have yesterday was a one-off, we'll see them run it right back down again. But anyway, I would be looking to buy weakness here down here to that support area at the 16, 17s for rotations back up. Now, as I said, I mean, this if yesterday's trading was just a one-off retracement back here to value, then we can certainly see them take it lower. The bond market is the one to pay attention to. If they start having an issue, they'll take out that 112.16 and start heading lower, and then look out. Then we have to pay attention. On the NASDAQ is also up here and holding on to the gains pretty well. You can see we have an attractor area here around at 20,500, and this prior one was at around about 20,500 attractor area. And chances are we may stall here for a bit. We will see how strong they are, but we had a pretty good flush on the downside yesterday, and they're right back up again towards the highs. If we can clear up the hurdle up here, we can be getting up to, okay, we're getting up to, it's going to be the hurdle up here to 21,800s. This area up there. That's when we start really looking at having a shot at getting back to the all-time highs. But we are right up here in this, you see this big area of volume. Lower edge is 21,200, upper edge is around about 21,800. Fairly big volume area right there. And we may actually get stuck here trading a little bit, but I would not be surprised to see them run up here and test the 21,800. And the key thing is going to be kind of take that out or not, or are we going to be staying here for a while building value? So that's kind of the dynamic in front of us. But I would start off on the long side on the NASDAQ, look to buy weakness, 21,400s. 350s, 320s down to the 290s for rotations back up. Maybe one level down to the 250s. They start trading below this area, the 200s. That's when you really have to start worrying about the short side. But if they take, I would take off the long bias fairly aggressively, 320, and go back range bound. And if they keep trading lower, I'm going to still be looking to buy against these support areas, just not as aggressively. I mean, I think they have to pretty much start breaking out pretty quick if they're going to see a good rally here. But you never know how it's going to kind of shake out throughout the day. Sometimes you get a little bit of strength and they have a pretty good run to the downside, start testing support, and then you have a rally in the afternoon. We'll just have to wait and see how that plays out. But below that 200, below the 280s and sorry, the 290s and the 250s, 40 to 50s here, if they start trading below that one, I think we are definitely heading lower at that point. But you can certainly see test all the way down to those levels if they start running it lower. You know, it's and that could just be a day session thing. It could be it could certainly be a spot, but a spot here where they cut off the buying. But we are in a pretty big area of volume right now on the Nasdaq, as I pointed out. This whole area, pretty good area of volume, and I would just be looking for the market to extend at this point, and then let's see where they run out of gas. But early on, if you get some early weakness to buy against, I would look for the 3, maybe 4 first levels, and if they start trading below that 290s, I'm taking off that long bias and going back range bound. And on the way up, looking for shorts against the 490, 500s here and the 550s for rotations back up. All with a little bit of caution, since we are technically in a move out in the middle to the upside still, right? But those if they hold, we may certainly like to run back down here and stay in this narrow range for a little bit. So we'll see how that pans out. But at this point, those are the only shorts. I think the better short comes early at 21,500. And if they start trading above it, I would not be super aggressive on the shorts up here. Because at this point, we're kind of in territory we haven't been in for a couple of months. And it's kind of had to wait to see where they find resistance again. And then finally, oil and gold. And gold is to the upside a little bit. They're trying to break out, trying to get out of that range, but they're not being very successful. The overnight we're done here probing towards the lows. And I split that thing out. I didn't do anything on gold, huh? I missed my analysis on gold. That sucked. Split out the day session. I need to head back down a bit, like so. The levels kind of worked out anyway. They were not that different from yesterday. This one should be a little bit higher, like there. So there you have it. That's pretty decent. So on gold, capital flow on gold, we are pretty much right smack here in this attractor area. So they're trying to get up. They were trying to probe lower and didn't work. They're trying to be back. They're back up towards the high, trying to take it higher. And I would just start off range bound. They're trading in the range. I would watch this upper area, the 3260s, and the lower area was going to be 3200 to 3210s. And if they break out of that range, I think we may have a directional move. But right now, it looks like gold is consolidating around 3240s here. But you see that we're down here probably pretty good down at the 3210s, and now they're right back up again. So I would look for shorts against the 3244s. 51s up to the 55 and 60s for rotations back down. Above that 60 level, we may have a directional move. And they're going to be looking to buy against support. And I would probably wait a little bit, look to buy against the 27s, 19s, 3210s, 3200 or 3204s here for rotations back up. And if it starts trading below this area, the 3204s, start thinking about the short side of the market and heading lower at that point. But I would otherwise range bound fade the edges back to the mean is kind of the dynamic on gold, at least to get started today. And then oil is actually pretty similar, kind of stuck in a range right here at the 62s, and that in a holding pattern, waiting for some news to drive it. And we traded up a little bit based on the Chinese deal and maybe more demand coming on market. But as I said, I mean, we'll have to see how the supply equation works out as well. This whole thing is going to keep coming lower. Okay, when? Who knows? But they already have taken it quite a bit step lower. We were trading at the 70 level before the inauguration, and now we are right back. Now we've been all the way down to the 55s, building value around 60. So we're down about $10 across the board a barrel, and I'm thinking and lower prices still. But I would start off range bound at this point, and then when the market is ready to move, it's going to move. And so you're looking to buy against the 6160s, 6120s down to the 6080s. And you're looking to sell against the 6220s, 6270s, up to that 6320s. So 3 levels up, 3 levels down. There could be more levels up here, all the way up to the 64s and all the way down here to the 55. So it's fairly wide, this range, but I would start with like 3 levels up, 3 levels down. And if this starts seeing them break out of that range, maybe you have a direction move starting one way or the other. But that's kind of how we get started. So I'm going to buy against 6160s, 6120s, 6080s. I'm going to get short against 6220s, 6260s up to that 6320s for rotations back down again. And it could be a nice long trade here. And then if they break up above the 6270s, running it up to 6320s, and it could be a nice 50-tick trade in there. We'll see. So that's oil and gold, but both of them are range bound. I'm not going to be focusing. I haven't focused on them too much lately. The ES and Nasdaq has been just fine to trade. And back to the ES, and here we are, just kind of waiting it out, waiting for this session to start. So no news to drive the market today. Let's see how the market feels about the whole move out of the middle, if they're ready to run out of gas or if they're going to keep extending. Maybe starting off from the long side on both the ES and Nasdaq, and then let's see how it develops. Alrighty, guys, we'll leave it there, wrap it there. So good trading. And I will see you back at 11:30 for the next update.